Hi there. So we're continuing our discussion about accident sickness. We just finished talking about disability insurance, critical illness, and long-term care. So you should be clear about disability insurance that it pays you a monthly amount which will be covering your expenses, and you have to prove that you lost your income and you're unable to work, so you'll get the disability payment. For the critical illness, it's a lump sum payment. If a person is diagnosed with one of the critical illnesses, it pays a lump sum. You don't have to prove that you're not able to work or anything. It's just if you have that diagnosis of the critical illness. Long-term care is paying you on a daily basis based on reimbursement for expenses. If you are unable to do two activities of daily living, then you're qualified to claim for the long-term care insurance. So hopefully that is clear, and we're going to continue our discussion now, and we're going to talk about the next chapter, which is chapter number 4. Under chapter number 4 is insurance to protect your savings. This is if any critical illness or you get sick or any other issue, then you have to spend a lot of money from your pocket. So extended health coverage, there's one type is individual. Under individual, you have medical insurance. So the medical insurance is going to cover certain activities which are not covered by the provincial, for example, OHIP, Ontario Health Insurance Program. In Ontario, they cover most of the things, but some things are not covered. For example, ambulance is not covered. Then if you break an arm, bone, then you have to get, the heavy plaster type of cast. If you want a fiberglass one, you have to pay extra for it. And if you want to go to a private ward, you have to pay extra. So those things which are not covered by provincial, that is going to be covered under this policy. Prescription drugs, any drugs which are said to be issued by the doctor, that is covered, prescription drugs. Then AD&D, accidental death and dismemberment, meaning anything, God forbid, happens, somebody's arm or leg gets cut off, they get a certain percentage, they get a certain payment amount, and that is covered through it. Then vision, for glasses, for eye checkup, for other vision-related expenses, that'll be covered. Then you have dental coverage. Dental, there is one is major restorative. That is for crowns and inlays. So putting a crown, that is very expensive, and there's a certain percentage probably that will be covered for the major restorative. Then you have routine maintenance, which includes every day not every day, but every couple of months you go for checkup, x-rays, cleaning, filling, extractions. Those are all routine maintenance, and usually after 6 months, 9 months, you are entitled to go and have these activities done. So this extended health policy will cover that also. Under travel, it will cover medical emergency expense. So usually pre-existing conditions are not covered under travel, but anything that happens to you when you're going abroad traveling, you need certain, you need to go to a doctor, you need to go to hospital, it will be covered to a certain extent. And then lost or damaged luggage, anything, if you lose your luggage, that is covered. Trip cancellation, if your trip is canceled due to no fault of yours, then it usually is covered also. And return of traveler home, if the person becomes sick and they have to come back, or need an air ambulance to come back, or dead body, bringing that back, so that is also covered under this travel policy. So these are extended health coverages. You can have an individual policy which covers 1 or 2 or all 3 of these, and that way, of course, you pay extra for it. But then once, if ever you claim any of these things, it usually, it will be very useful. It reduces your, expenses that you have to spend, your savings. And then there are group policies also, same thing, similar way, medical, dental, travel, they will be covering these also, but their policies will be different. Every company has their own rules, regulations, of course. So deductibles and co-insurance, we'll talk about this in more detail, but just to give you an idea, whenever you make a claim for extended health, There's a deductible, first of all, that is an amount which the insured plan takes over. And that will be, first of all, so you as the person who's claiming it, the deductible will be applied from your claim. And then the leftover amount, there's a certain percentage of that the insurance company will cover, and that is called the coinsurance amount. Let's take a look at this example. Griselda had a $100 deductible and an 80% coinsurance. She did a $500 claim, so 500 minus the $100 deductible, then you're left with 400, and then you do 80% of 400, and that will give you $320. So $320 are paid by the insurance company, and so we can say $500 minus $320. That means that $180 is paid by the insured out of their own pocket. So this is the basic concept of deductible and coinsurance. For these premiums, the taxation is that the premiums are not deductible for income tax purposes, but they may qualify for federal medical expense tax credit. So that is the taxation concept. So these deductibles talk a little bit more detail. Like we said, it is the amount that must be 100% paid by the insured, and they are applied annually and they start new each year. So there's a limit on the deductibles also. There's an individual deductible and there's a family deductible. The individual deductible is for every claim. When you put in a claim, there is an individual deductible. So once the family deductible is fulfilled, then there's no more individual deductible. So let's take a look at this example. Hopefully this makes it more easier to understand. John has a deductible of $50 per claim and 80% coinsurance. The family deductible is $200, which means that after 4 claims, if you do $50 times 4, that's $200. It means after that, then on the 5th claim, there will be no deductible. Let's look at this example. Claim 1, $125, 125, you minus the $50 deductible, you're left with $75, and then $75 times 80% will give you $60, which is paid by the insurer. And then claim 2 is $250, for example, and then $250 minus the $50, you're left with $200, and then 200 times 80%, so $160 is paid by the insurer. Claim 3, $350, so $350 minus $50, you're left with $300, and $300 times 80%, so $240 are paid by the insurer for this claim. Claim number 4, $50. Now, there's only $50 deductible. That's it, 0 paid. You don't get anything out of that. It just reduces the deductible. Now, by these claims, you see now you've already used up 50, 50, 50, 54. So you've used up $200 of your individual deductible. Now, in the next claim for $200, suppose that $200 is no more deductible. It goes directly, just 80% of that is going to be $160. So the client gets $160 of that, which is covered by the insurance company. So hopefully this makes it more clear, etc. So any other claims for this year, no more deductible. So make it clear what is individual deductible and family deductible. So next, this chapter has a lot of detail, and if you read through it, they give you, again, they tell you all about the individual, and they repeat the same thing for group. Group has the same similar concept, similar things. Prescription drugs are covered. Those which are written by a doctor, enhanced medical and hospital care is covered. All the medical practitioners, like we mentioned in the individual policy, same thing are covered there. Chiropractor, psychotherapist, naturopath, optometrist, etc. If you want a private room or a semi-private room, you will be covered for that. Then dental care, vision care, accidental death and dismemberment. So there could be loss of a limb, and then a certain percentage of the benefit is paid out due to the loss of the limb. So in that way, it's same concept for group also. So this is a good table, table 4.2. It shows the difference between individual and group extended policies, extended health insurance policies. So in the individual, it's the insured has full control over the policy coverage. You can decide, I want this coverage, I don't want this. In the group policy, you have some coverage, but more or less, there's a master contract that you have to follow. Portability, individuals fully portable, and group one, it finishes. If you stop, then it will stop. If you stop working on it, yes. Underwriting at time of application, yes, usually they will do a full underwriting. They'll check and make sure you don't have any pre-existing conditions. In the case of group policy, there's no medical beforehand, or there's no questions. Individual policy is not retroactive. Group policy is. Claims adjudication by the claims department only. And the premiums, it is based on underwriting. So in individual, they look and see what is their medical situation. Group policy, they don't. Premium cost, individual are more expensive, group is lower, and the individual is very flexible. Group policy, you can make some changes, but you may have option 1, 2, 3, that's about it. Family coverage, yes, you can have for both. The coverage levels are usually rigid for maximum coverages for individual, and the levels of coverage usually higher for group. Coinsurance applies to both, and taxation. So like we mentioned, in the individual policy, the premiums qualify for the medical expense credit, and the benefits are tax-free in both cases. In the case of group policies, the premiums are paid by the employer. They are deductible for the employer. That means the employer can claim it in their expenses as a business expense, right? And then you cannot claim it as a taxable benefit for the employee. The pre-existing conditions are, they will be excluded in the case of the individual, and in group policy, it doesn't matter. Because they don't ask you about pre-existing conditions. And the possibility of sharing costs, no, 100% is paid for by the insured. And here, yes, the company may pay for it, and even some companies may pay 100% of it, or maybe 50-50. And in the case of individual, there's usually no deductible, but in the group ones, there is. So hopefully this chapter 4 is clear now, and then we'll continue next with chapter 5. Thank you very much, and have an excellent day.